This is a short video to give you some ideas for where you can find good information for forecasting your earnings per share and revenue for for Apple for the second quarter. That is the quarter ending March 2019, and um, what we're going to do is just look at some of the information that's available from Apple, because if you don't consider that information, you will lose. You need to take an advantage of all of the information that's out there from publicly available sources, and um, most importantly, from Apple itself. So, as you know, on January 2nd, Apple released this letter from Tim Cook to its investors, um, and it looked wonderful, except that when we got down here, we recognized that they're expecting a smaller earning growth in sales, and this was for the first quarter ended March 29th or December 29th. So they were telling us uh, guidance, and they said it's not going to be available until the end of January, but we want to give you this guidance now. And we saw early in the class that the stock price dropped after this letter came out substantially. I think it was something like $20 a share. Anyway, this letter is very much available. It is all of the information that helps predict our earnings per share and revenue growth for the quarter ending in December 2018. Remember that Apple is on a September 31 or September 30th, or they do the same day of the week. At the end of September is their fiscal year end, and then their first quarter is their big quarter on a seasonal basis, because it's the Christmas quarter ending December, at the end of December. Um, but there's a lot of good information here that you would be remiss to ignore. For example, they're talking about the growth in non-iPhone categories, services, Mac, iPad, wearables, home accessories, home and accessories. They are all growing pretty good. It's important to recognize, though, that iPhone dominates their revenue, and iPhone was down. So this is the letter that came out on January 2nd of 2019. This is a bunch of the legal stuff that comes down. This is the end of the letter here, where it says Tim. Then at the end of January, they put out a conference call, and that conference call, let me share that conference call with you. You can get those conference calls that are available on the company website itself, and let's just listen to a little bit of it. Here's the opening of the conference
CEO
call.
Tim Cook, and he'll be followed by CFO Luca Maestri, and after that we'll open the call.
So I'm going to skip forward to about here.
To do is provide some final results and connect those back.
CEO Tim Cook, and he'll be followed by CFO Luca Maestri.
Yeah, there's some legal stuff in here.
To do is provide some final results and connect those back to the letter we shared at the beginning of the month. As you know, our December quarter revenue was below our original expectations, coming in at $84.3 billion. That's down 5% from a year ago, or down 3% adjusting for foreign exchange. We noted 4 factors that would impact our results when we provided guidance in November: different iPhone launch timing from a year ago, FX headwinds, supply constraints on certain products, and macroeconomic conditions in emerging markets. One of those factors, weak macro conditions.
So it goes on, and I also want to point out that if you scroll to the end of this, you can hear where they're actually having a question and answer session.
The reclassification is actually diluted to our growth rate because The amortization of free services is a relatively
I
stable
believe this
number,
is the CFO,
which gets
Luca.
applied to a growing base. So this reclassification reduces our growth rate versus the previous classification. This factor by itself represents roughly 1/3 of the deceleration that you've seen. We talked about 27% growth in the September quarter. With the reclassification, the growth rate was about 24.5%. So that explains about a third of that deceleration. There are, I would say, three factors
OS working on an older range of products, et cetera. But I guess the question is, why doesn't that mean that replacement or upgrade cycles for iPhones should continue to extend going forward, in part because that's almost one of your objectives? And maybe to that end, maybe you can help us understand what iPhone's average replacement cycle might be today and how that may have changed over the last 3 to 5 years. And
the
again,
replacement cycle will help
why wouldn't
forecast
you expect
sales.
it to elongate over time, given some of the aforementioned things? Thank you.
We do design our products to last as long as possible. Some people hold on to those for the life of the product, and some people trade them in, and then that phone is then redistributed to someone else. And so it doesn't necessarily follow that one leads to the other. The upgrade cycle has extended. There's no doubt about that.
Okay, so there is the actual conference call. Now, what I did is I downloaded. I went and got the transcript from this, and it's available. Sometimes you have to sign up for something and give your email address, but this entire conference call is word for word available here. This is the legal stuff that this lady Nancy Paxton reads at the beginning that I skipped over, and then there's Tim Cook, and it's word for word all the way through this, and it's but there's so much information here. And again, this is publicly available, and other people who are forecasting earnings per share, which is real money on the line for the second quarter, are going to read this. So you should read it and consider this. This is talking about they're talking about the 4 factors that are driving. It's important to understand what's going on from the customer's point of view, and we just need to understand what all of the changes are that are going on and how they might affect earnings per share in the second quarter of 2019. And this is all in this Apple call transcript. And you can use this because it's a transcript. It's easier to get to the point where you get the information you want. You can go to this website that I was just mentioning, EarningsCast, and listen to it here, but in terms of information that you might want to actually dig into, the transcript is helpful. The next thing I want to do is show you that you can go to the SEC website, and here look for the 10Qs, and we're going to just list out these 10Qs for Apple. This is going to be the first one, the most recent for the quarter ended let me back up and put that into a new, open a new tab. This is the most recent quarter, ending in December 29th, 2018. And in here, you can see that if we go down here, especially focus on the MD&A, Management Discussion and Analysis, often referred to as MD&A, that you can see the sales by category here. And they just in November 2018 decided they're not going to tell us how many products of each individual unit sales, but they do tell you a little bit. They tell you just a decrease the unit sales due to lower iPhone unit sales in all of the reportable geographic segments. So iPhone unit sales went down. But I'll show you in just a moment, if we look at last year's 10Q, we saw actual details of the number of units. But here you can see that for 2017 to 2018, iPhone sales dropped 15% in the same quarter. And as Tim Cook pointed out, they introduced in summer of 2018, which is their Q4 fourth quarter, that's when they introduced their iPhone 10 instead of being in the fourth quarter, and that was a big chunk of why their sales decreased. At least that's what Mr. Cook said. So this is the Q1, and it tells us of what happened to sales between the Q1 of 2017 and Q1 of 2018. Notice that other segments, as they point out, went up considerably, especially the wearables, but also the services. And this is Apple Care, Apple Pay, digital content, the iTunes, all of those are up 19%. So what it appears to be happening is that their revenue base is flattening out from just iPhones, or largely just iPhones, to other things. Now let's go back and take a look at the quarter that ended in March 2018, and I'll put that in a new tab also. And in that one, again, we're going to take a look at the MD&A specifically. And here you can see that this was for the quarter ended March 2018 versus the quarter ended March of 2017. And sales went up from 33 to 38. And I would suggest that it's these numbers individually that you'll want to forecast for the quarter ended March of 2019. So you can take these and use them in combination with some information that's available here about what's happening to each of the respective segments to forecast sales for the quarter ended March of 2019. And with that forecast of sales, then you should be able to use that as a basis for forecasting earnings per share and doing your earnings per share analysis. And you can do that from financial statements by looking at the financial statements. Let's see. Did we go below the financial statements? Yeah. So here's the income statement. And it's this number, basic earnings per share, that we want to forecast for the first quarter, the quarter ending March 2019. Whatever that is the key number. But I'd like to see that you forecast all of these numbers for the first quarter, the quarter in March 2018, and use that to estimate the earnings per share, the basic earnings per share. That's what I have for sources of information for Apple.